This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648, and I'd like to start the show by congratulating Kate for having that gentleman on. I like to listen to her show, but that fellow, David James, had two things that I think are really important from a trading perspective. And, folks, I don't trade stocks. I do futures and Forex and bonds. But, he said if you focus on the sell side, in other words, don't worry about where you get in, worry about where you get out is what he was saying, and that's when you're focusing on your risk. That's the most important thing, to really focus on, because trading starts after you put the order in, because then you have to figure out how to get out. That's the most important thing. The second thing that he talked about was the fact that, these folks that do the, upgrades and give these recommendations on, stocks that work for companies, and the fact that if you follow them, on a yearly basis, it comes out to about a minus 1%. I didn't hear the exact words, but I know the statistics behind it are negative. And part of the reason for that, folks, is they don't have any skin in the game. They don't have any real money like we're trying to do. So just remember that when someone puts something in print, doesn't necessarily mean it's going to be so. I want to relate a story here for you. In 1999, on December the 29th, a guy from, I believe it was, I can't remember. It might have been Payne Weber. I think it was Payne Weber at the time. His name was Walter Piecyk, and his stock was Qualcomm, and it had closed around 600, and the stock, he said he gave it a price target of $1,000 a share, and I was short 500 shares on a 3-drive up pattern, and I said, oh, brother, and I was trading for some people in the Middle East that I'd been trading for quite a few years, and I called them up, and I said, I got a problem, and, I told him what it was. He said, I had a really good year. And he said, don't worry about it. He said, it's not going to be a lot of money. He said, it's only $50,000, $60,000, because they were calling the stock to be about $150 higher. And they asked me what I wanted to do, and I said, I'm going to wait an hour. And if it's above where it was in the first hour, I said, I'm just going to eat it and, move on. Well, the stock opened at, I believe, it split open between 680 and 724. It closed down on the day, and that was the high for Qualcomm for forever. It never did get any higher than that. So just because someone says it, it doesn't mean that it's so. If that includes me, that includes me. And the funny part about that was years later, Walter was able to get free room and board from the United States government for insider trading in a nice little 6x8 private apartment somewhere in Washington, but where I don't know. Today's is the commodity show, and what I did this morning early was to show the Gartley pattern in the gold that we had early this morning. We had that big sell-off in gold of $100, and all I did was wait for the bottom to come in, and then I waited for the AB equals CD pattern to come in on the gold, and it came in right at the 1702 level. If you put a $10 stop on it, it actually, it worked out pretty well. So if you get a chance to go into Tiger TV, take a look at that. Now, also, just to try to show you that, these things are similar, I also did the chart for Apple. And, the Apple did the same pattern that the gold did. And so both of those, the patterns are doing the same thing. The difference is that, the gold chart is a commodity, and the Apple chart happens to be, of course, a stock. But everything moves the same. I mean, they all either go up or down, and they all either, go sideways. And so what you're trying to do is to find, what those patterns are, and that's really, what you're looking at when you try to do that. So your first profit objective is usually 1.5 times what your risk is, and that means that you're making more than you're losing when you're winning. And if your probability of winning is greater than your probability of losing, which you do have in a Gartley pattern, this is what you're really looking for. Now, I think but by the way, I'm going to have Dr. Steve Shapiro, my old friend from many, many years ago, who helped me write my book, Astro Cycles, The Trader's Viewpoint. He's going to come on and give us a little chat at the break, and so we'll have a chance, to take a look at that. But right now, what I'd like to do is, because we are focusing on one particular thing on the commodity show, because it's a very long-term pattern, I want to go over the pattern that we're looking at in the natural gas, because we should look at it. I only get to do this show once a week, so I do want to do, the same thing we're doing in the bonds. Now we're waiting here, but now we're getting a chance to, to buy some of this. The natural gas is coming back down again, and this is what we wanted to see happen. But on the long-term basis, going back, several years, we've got this huge AB equals CD pattern, and realize that the natural gas is actually making, 20-year lows. And this is important because it's an alternative energy source to crude oil. And, crude oil has had a big move, and we want to be able to, capitalize on this if we are, in fact, able to, do it under our terms. And that's what we're really trying to do. So the second step that we've been following as we've been doing this commodity show, recently anyway, I've been doing the show for quite a while, ever since, Ed stepped aside, which, gosh, I still miss him. And he's actually doing okay, I understand, at least the last time I checked. The main thing that I wanted to talk about on this next one was the fact that we would be looking at the retracements coming in here on the natural gas, and we've always talked about this $2.43 level in the natural gas, and we're getting very close to that level again. We've been there 1, 2, 3, 4 times over the past, 5 or 6 weeks, and it looks like we could be, into that area again. If we go below $2.30, then this would tell us that the cycle has, extended out farther than we expected, and that would be our risk on this if this were, going to be what we're looking at on a longer term basis. So this is what we want to keep our eye out. Now, yesterday's move in the silver was, and also gold, was really dramatic, folks. That you have to take notice of that. And the reason why is because when you drop $100 in gold, that's not an easy thing to do, because I think it erased like $1.5 billion in ETF, and which was really quite amazing. But the silver hit the exact 61% retracement up there at that 37.30 per ounce. It broke almost 10%, and it has held up relatively well from that level. It hasn't broken below it. The really important thing to look at with silver now is to watch it. If it goes below $32 an ounce, that's going to be a very very negative sign, from a technical standpoint, in my opinion. And I, of course, my opinion's like everybody else's. It doesn't mean very much unless it's right. But the fact that it did hold, this major support level in silver is, I think, relatively important. And that support comes in around 33.50. And as we mentioned yesterday when we were talking on the show, one of the things that has happened that is interesting is that the silver, took out the highs from the November level, but the actual gold did not. Gold did not get above the 618 retracement by more than just a little bit. And what I've done into Tiger TV is I've shown gold as a dark yellow gold line. That's what it should be, I guess. And silver is the green chart, and you'll see that the silver has been actually outperforming the gold since the double bottom was made back in January, actually December 27th. So this is very, very important support that we have at 33.66 in the gold. That was a 786 retracement coming off the low of February 13th. So everything is still in place. I mean, just because it has a big sell-off, it's had these before and come back. So just one day does not make a trade. So just keep in mind the prices of 1680 in the gold and 33.50 in the silver. Those are the two levels that you want to be watching if you're in the gold and silver, because it needs to hold that level, and if it does, then it has a chance to come in and you'd still be able to have it to the upside, because just because you have a big down date doesn't mean that's the end of the world. People call those key reversal dates, but in fact they don't always happen that way. They're just big sell-off days. And at least we're having some activity, in the commodity markets. Stock markets like watching, butter melt. I mean, it's just nothing going on. There's no volume. None of those things that are happening, that should be happening that would make it, make it work any different than in other words, there should be a lot more going on in stocks if it's going to be really good. I mean, it's just nobody playing in the stock market. Now, what's interesting, since we're on, we move over to crude oil here, because I think it's important, because we hit some very important levels yesterday during the big down move. And those of you that like to look at, AB equals CD patterns and, watch how the markets move up and down, you'll see that the pattern that we had in in crude oil over the last, several days since the 26th of, February, we've come down, on several AB equals CD patterns. I put them into Tiger TV. They've been absolutely perfect, folks. I mean, almost to the exact tick. When we got down to our bottom just below 105, and then today we've rallied up and made a 61% retracement, of the high we made back on the 24th, and now that just tells us the market came back very, very quickly, and that's pretty much what we're looking for. Now I put this into Tiger TV real early this morning when the markets were first trading on March the 1st, because I was assuming we were going to get to this 108 level today because of the way we came back so quickly, and that's exactly what's happening. So crude oil still looks like it's okay from the upside. The gasoline futures are moving incredibly well, and so that's telling us that nothing's really changed with this. It just had a big sell-off, and we've always said that you want to be able to buy things when they're coming down, and because it's much easier to control your risk when you're actually, doing these things. So this is something that we want to keep an eye on. I think we're going to be coming up to a break time, and then we'll have Dr. Steve on. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, 877-927-6648, and I believe we have Dr. Steve Shapiro on the line, my friend from many years ago back in California when I was first writing the book, Astro Cycles, the Trader's Viewpoint. I used to stop in to his house and have breakfast with he and his mom before he taught school. Then he would come over to my place and we would trade together. Are you there, Doc?
Yes, I am. Good morning.
Hey, how you doing?
I'm doing fine. How are you doing?
I'm good. Listen, the main thing that people were interested in is yesterday we had someone ask the question about, the wide-ranging bars. And since we've spoken, I've asked you to come on the story. Why don't you tell them the story about, the wide-ranging bars and, how it got called the Shapiro iteration. I think that's interesting. People might be interested in that.
That's a funny story. Ironic. When we used to trade, it would seem that whenever I was ready to finally make the trade, within a moment, sometimes before I put the phone down, it turned. And no matter how closely I tried to make it work, it just seemed so many times that would happen. So I thought, well, okay, if it's a good trade at this time, whatever the time was, whatever bars we were using, whether it was a half-hour bar, a 5-minute bar, or an hour bar, I thought, well, how about if I just wait one more bar? If it was a good trade a bar ago, it'll be a good trade a bar in the future, one more moment or however long it was in the future. And if it was not a good trade, then it would turn. And more often than not, maybe 75% of the time, it seemed to work. So I started, whenever I felt that it was time to make the trade, I would wait one more bar. And that was a good thing. I saved myself a lot of money over a period of time just by waiting one bar, whatever the bar was.
I remember when you first told me you said, why don't you wait for an iteration? And I said to you, I said, what do you mean iteration? I said, I don't use words like that. And then you told me, well, that just means you wait just a little bit. And so what we developed was this wide-ranging bar theory where, when the market's coming down, you don't really have to catch a falling safe. You wait and, till you get a doji or something like that. Now, Steve, the way this works is we'll go 3 or 4 more minutes here. Then we have to do a little break here. But I wanted to, talk to you a little bit more after the break about some of the work that you did in wheat. And I know that you're a very generous person. And if the folks want to get in touch with you, do you have an email address that
I
they
do.
could email you and
Sure.
chat with you if they need to?
Yes, no problem at all.
Why don't you give it to me, and then I will type it into Tiger TV, and the people listening, if they have an interest, could give you, a call on some of your thoughts, because you've got some really good research on wheat that I think is very, very important. What is your email address?
SGSDR, Sam, George, Sam, David, Robert, SGSDR, Sam, George, Sam, David, Robert, at aceweb, ACEWEB.com. That's, once again, SGSDR at aceweb.com.
Okay. Steve, when we were doing the book, when I was writing the book Astro Cycles, you were almost at the house, or I was at your house every day, or you were at my house every day, and we were doing a lot of work, with the grains and wheat and things.
Yes.
And I know you carried some of the work that I had done, and in fact we did together in wheat with the lunar things. And I was wondering, they're still working to this day. I don't trade wheat as often as I used to, but when I do go back and look at it, it's amazing how that cycle in wheat has held up all these years.
Well, the way I figured it was, the moon's been there for, 4 billion years? And the introduction of me or you and trading 1 or 2 or 3 or 5 or 10 contracts was not going to change things all that much after 4 billion years. So if it worked that way for that long, and the wheat market has been trading, about 150 years or something like that? And if it worked that way...
Yeah, 1835, I believe it started trading.
Yeah, so even if I give it away to somebody, an additional 5 or 10 or even 100 contracts is not going to make a difference, because what is it, about 35 to 50,000 contracts a day are traded? So 5 or 10 more.
Very easily. Yeah, very easily.
Steve,
we got to take a little break here, and when we get back, I want you to stay with me, because I wanted to tell some of the stuff that Dr. Andrew Lowe's doing at MIT on the astro things, and we can talk more about your wheat cycle when we get back, okay? So hang with us, 877-927-6648.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we're talking with my longtime friend, Dr. Steve Shapiro. He's got a couple of degrees from Temple, a couple of degrees from Drexel back east, and he's also done a lot of work with wheat, with the lunar cycle. And Steve, I don't know if you're aware of this, but Dr. Andrew Lowe from MIT has written a book called The Evolution of Technical Analysis, and in the first part of that book, he talks about how the Babylonians, going back to 3500 BC, used Mercury, and the moon to predict cycles in wheat. So did you use any of that work in your work, or was it, how did you arrive at some of that?
I had not, I was not aware of that. No, I just developed theory myself based on observation, and the Bryce Gilmore program, that wonderful program that he wrote, he had incorporated where he wrote the application so that you could lay the cycle of the moon's phases over any chart you wanted. So one day after the market had closed and I had nothing to do, so it went in our trading room. I just was laying that cycle over a number of different charts, and none of them really lined up except for wheat. I was absolutely amazed that they corresponded so closely. So I started to track it myself, and it continued to line up very well. And then I wrote some guidelines for how I thought it was working, and paper traded for a while, and it worked. And then I think the first real trade I put on was the eclipse of the sun in January, and 12 out of 13 trades I made real time worked.
Oh, that's really good. Well, if the folks have an interest in some of the work, they can contact you by the email address that we've posted in there. Is that correct?
Yes, absolutely.
Okay.
And I'll be sending them information on it and talk to them or you correspond with them about it, because I found it fascinating. I'm from the East Coast, of course, and here I was out in California, and I met this guy, who was trading by using planetary functions, and I really expected the first time I saw you for you to be wearing a cloak with stars and half moons on it and a pointed hat. It was the same, and it didn't work out that way, and I just didn't believe that it could work, but you proved that it did work. I was amazed. That made me a believer, so that when I started thinking about the wheat program, I knew that this stuff meaning the astrology, had something to it, and it turned out to be true. So I thank you for that, for what you did, and you must have left your cloak with the stars and half moons home.
Well, we lived in a time, almost 30 years ago with Bryce Gilmore and, Mark Douglas coming up, all the time visiting us and things. That it was an era where we were both learning a lot. And I want to thank you for being on the show today, and hopefully, we'll have you back again, shortly, and, we can talk some more about, those days and some of the things that, you might be working on. So thanks for joining us today, Steve, and I really appreciate you being on.
Pleasure, Larry.
Okay. Talk
Bye.
to you later, buddy. You bet. Okay. We need to take a look at, if you go into Tiger TV, take a look at where soybeans are right now, folks, because we've been following this for several weeks, and we are now up against the 61% retracement at $13.21 a bushel. It hit it 2 days ago. It backed off yesterday with the rest of the margin call selling that we had with gold and silver, and now we're back up to that same level. Also, in the Tiger TV, I posted the wheat chart, just showing the simple AB equals CD patterns in wheat over the past, month or so, and you'll see that they're nearly absolutely perfect. And this was, the type of thing that Steve worked with, but what he did was he had this lunar cycle that he used for timing with it, and so, it really does work well, and it's very harmonic, and, that's what I try to do when I come into the show each day, is to put up a chart of something and to show you that these patterns repeat over and over again. They're not 100%, but they do give you a place to, enter the market where you can protect yourself with a relatively decent stop, and the probability of winning is greater than your probability of losing. Now, I don't make money every day. My goal is to try to make money 3 days a week. I lose usually 1 day a week, and break even 1 day a week on a series of 100 trades. That's pretty much what it's going to look like. When I have a period where I do better than that, I usually don't make nearly as much money, and the reason for that is I'm trading shorter term. And short-term trading is fun, but I really don't like to look at the monitors, even though I've got some big ones. They turn off in 15 minutes, otherwise they give you a sunburn. But, I just basically try to plan the trades, and then go on to the next one. That's what I do when I come into the Tiger TV, is to try to put a chart up of, like today it was gold, and I also put one in for Apple, and just to show you how the patterns, work, and sometimes they do, sometimes they don't. But, invariably, if you do them over a long period of time, you're going to do, far better. I do have one other thing to mention. I don't usually say something like this, but I got an email yesterday from one of my colleagues. Everybody in this program or listening has heard his name. I'm not going to mention who it is, but he told me, he said that my letter this week was one of the best ones that I've written, and he does, read my letter. So if you haven't tried, Patterns, Profits, and Peace of Mind, I suggest you try this week's letter, because he really thought it was pretty good. And, if he thinks it's pretty good, it must be okay. I spent a lot of time doing it, But if you haven't tried it before, now would be a good time maybe to take a look at it. He was particularly referring to the long-term studies that I did that went back into the 70s and 80s, and how it showed how these numbers come together, when the Fibonacci sequence, and then also the huge divergence that we're having now in the NASDAQ and how it compared to what happened in 2007. So both of those are things that we want to keep in mind. If you're in the stock market, because even though it looks like it's going up every day, frankly, it's just a few stocks that are doing it, and the volume is still getting worse and worse, and the overall advanced decline is still looking, very, very poor. And so just keep that in mind. Now, the next question we wanted to bring up today was about the open interest in the gold and the silver. Nothing really dramatic happened yesterday. There was a little bit of a decrease, a big increase in volume, of course, but a small, decrease in the open interest in both of them. So nothing really dramatic. It was just basically longs and shorts evening out, probably related to margin call selling. When you get a $100 move in gold, that's 10 grand. And, it's 100 grand. Is that right? Let me see, 10,000. Yeah, that's $100,000, isn't it? Yeah, let me see, $10 is 1,000. No, it's just $10,000. Sorry. Anyway, that's a pretty big move, and we had a huge move in silver, was about $15,000. So what that does is it makes people liquidate their position, because they do it on margin, and it makes it a little more difficult, because it's not like stocks where you have 50% or 25% margin. You're usually dealing with 90 or 95% margin when you're dealing with commodities, which is an advantage. And the same thing is true of the crude oil also, because crude oil and also gold, all of these dealing with heavy margins. They've raised them a little bit in these things because of the fact that we have had so many big moves of 5 or 10%. So you can trade the mini contracts in the gold. You can trade the mini contracts in the crude oil, because they do have good volume and the fills are pretty good from what I'm told. But that's really what you're, you really want to do if you have a smaller account. Now, a few months ago, way back in December, we looked at, sugar, and it was making a bottom down around 22.70 a level. And since that time, it's moved, well over, $3,000 a contract. And now what's happening is we are in the midst of a small correction. So next week on the show, we want to be watching the sugar market for a potential buy. Now, I don't trade the softs, and the softs are cocoa, coffee, sugar. I hardly ever do those, but occasionally, when we have one of them that lines up pretty well, I will look at that. But most of the time, all of my trading is related to, soybeans, wheat, corn, bonds, crude oil, gold, the stock indices, and, that's pretty much what we're looking at. Now, the largest crop we have in the world for the U.S., for the U.S., is the corn. And I wanted to, bring out the chart on corn, because we've been watching it for a long time now. And it is finally, getting ready to move higher. We talked about it, I believe it was last week, that, we were ready to break out to the upside. And if I can just get the chart lined up, because it's not as easy as you think it might be when you are challenged with being not technically adept like I should be. And I'm almost close, except that it keeps jumping around. Okay, give me 1 second here. There, almost. Oh dear, I'm just gonna blow this up because I don't have a lot of time. I just want to show you what's happening in corn on a short-term basis. Wow, this is embarrassing. I should have. My computer is jumping around, so I'm just going to print it out here. And I should believe in color TV. Okay, in the Tiger Den, the Tiger TV, you're going to see this line that we put in last week. We had a Gartley form down there at around that 625 level. Now we've jumped about 30 cents, and we busted above that breakout line at that 640 level. We're right now 15 cents above it. The market sold off just a tiny bit yesterday, really not very much, but it's held up relatively well. Corn looks like it's working its way higher, and so as long as we stay above this 640 a bushel level, the corn looks like it has a pretty good chance of moving to the upside, and that's what we're looking at now. I'm watching beans, I'm watching corn, I'm watching wheat. So, and each one of them trades differently because they are different products, they have different markets, and so you have to be able to understand, why the charts are a little different. You don't have to know anything about the fundamentals. I haven't looked at fundamentals in these markets in well over 30-some years, and all I'm looking at is the charts, and the charts are telling me whether people want to buy corn, and the charts are telling me whether people want to sell corn, and that's really, what I'm looking at. I also take a look at the rice market, and I also watch the livestock market. Now, I don't trade the livestock markets, but maybe, once or twice a year. That's, basically, what I'm looking at is just a couple of trades a year in that. And we are approaching one in the live cattle market that looks, very, very interesting. And that's the next market that we're going to talk about here. And because it's no different than any of the other markets that we have. Of all the patterns that we're looking at. And this is one that we've been following in the commodity area here for quite some time. And we are now right up into the area where we are looking to be a seller. This is in this area around the 130 level in the cattle. Now, you don't necessarily have to do this trade, but, this is one that we are watching, and we want to be able to follow it as we go through on Tiger TV here. Oh dear, what happened? I think I really messed up. Oh dear. I think I messed up badly. I thought I lost everything. Boy, I tell you, when you're technically challenged, man, you are really technically challenged. So anyway, the cattle chart, I hope I can get it into the Tiger TV. And we are completing a big butterfly pattern up here in this 130 level. And so we want to watch cattle. The price that we're looking at is right where it is right now, around 130, and you'd be looking about a 2-cent stop on the cattle. That would be around $800, and your profit objective would be around $2,200. So it's about a 3-to-1, risk-reward ratio for profit to loss. But it's been following, an up market. We've had higher bottoms, higher tops all along, and each one of those you could have, been able to, to buy it. The prices are at the point now where it's reached the spot that we're looking at, and so that's what we're looking at in the live cattle market, and we will follow that each week just to see whether it's right or wrong, and also if we are going to be correct or not. So this is what we are planning to do, and I think we have a small break coming in here, and then we will go on to the next segment of the show.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I've saved the worst for last, and that is the Treasury bonds breaking down to that key support, that 140 level. I guess it was related to what Mr. Bernanke said. We were at the 786 level just 3 days ago, looking like it was ready to break out to the upside, and in fact, 144 level held it, and now we're coming down. Now, the difference is the ETF for the Treasury bonds, which is TBT, is not doing nearly as well. I mean, it is not breaking out. It's still in this long-term congestion area, and so I would still, keep our powder dry and wait and see if we're going to get another chance to do it. I said before, if we miss this, it'll break and it'll have one big correction, I'm sure of that, and we will get in it. But right now it's looking, with that gap down that we had and the 140 level being tested again, it's beginning to look like I might have missed the trade of the year, by a few points on the upside, but I'm still giving it some chance here into early March. because we've got this big this big Bradley date coming in a few weeks, and it could happen at any time, of course. But we want to keep looking at it. I am watching it closely. I want to buy it at 16.80. It's trading at 19.29, so it's $2.50 away. We would need a move up into that 149, 150 level, and we'll have to wait and see. This is a, when you look at the chart today in Tiger TV, you'll see that we've broken down below that support that we had at 142, 141, and we have an ABCD down here at this 140 level. It makes it a really strong support if it can hold 140, but we have to wait and see. The problem was the gap, and when it gapped down, that was saying that there's something not right, and we'll have to wait and see. Everybody in the whole world loved these bonds, a few weeks ago, and right now I want to be short, and I'm not in them. They're going down, and if you think that's not a good feeling, believe me, there's an old adage: it's better to be out of a market wishing you were in than in a market wishing you were out. And so I'm wishing that I'm in, so all I'm going to do now is to wait and see the best possible place to do it. Remember, this market has been going up for 30 years. In other words, interest rates have been dropping since October of 1981. I really thought this butterfly pattern was going to form up at this 149, 150. Our high has been 147. And so what we want to do now is to wait and see, what our strategy is going to be if they continue down. Because if they continue down, rates are going to go higher, and then we'll have to sell on a retracement. But I still want to give it a few more weeks, and then we will see what happens. I had the same thing happen in 2003 when I wanted to buy the Japanese stock market, the Nikkei. I wanted it to go below 7,000. It wouldn't do it, and I kept waiting and waiting, and the trade of the year didn't get triggered, I believe, until March of that year, and it quickly went below 7,000 to around 6,700, I believe, and that is when it turned and took off, and that's it. And, we'll have to just wait and see. There is a slight problem with my data, and that is that the March contract has rolled over to the June, so there's not a gap there, but the move down is still bad. So we want to be able to keep in mind that that's what we're looking at. We'll still have a chance to get in the darn thing, but let's just wait and see what happens after the support is tested, and whether the stock market is going to have some type of reaction from where all these ABCD patterns are, and they might fail. But, we had a big move down in Asia, in Hong Kong last night, coming off of that larger ABCD. So, we'll wait and see if that's going to do. So that's it for the week. I want to wish everybody a happy weekend, and say a prayer for Davy Jones. He's a really nice fellow. And may God bless.